Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview. I'm delighted to be joined today by Alex Whitworth, Vice President and Head of Asia Pacific Power Research at Wood Mackenzie. Thanks so much for joining us, Alex, today from Shanghai.
My pleasure to be here.
Great to have you. Let's talk a bit about, we're going to talk a little about power, renewables in Asia, which is your particular area of research currently. Wood Mackenzie also issued a recent report in particular on China's Belt Road Initiative in the context of its power project investments, and in the past decade has invested in 128 gigawatts of power capacity across various Asian countries. But give us a bit of an update on where those projects are. I believe there's been some that have been shelved and stalled, and why is that?
Well, the Belt and Road Initiative in China has recently passed its 10th birthday, and so it's been overall quite a successful initiative. Under its umbrella, there's been over $1 trillion worth of investment poured into South-South cooperation mainly, which is between developing markets, between China and other developing markets in Asia, Africa, even as far as Europe and South America. So we have recently released a report at Wood Mackenzie on the power investments. And as you mentioned, there's been a large amount of power investments, roughly about 1/5 or so of the investment going into the Belt and Road Initiative has been in the power sector. And 10 years ago, when the initiative started, it was actually a lot of it focused on coal power and conventional power. And as we've come through the last decade, we've seen that many of those coal projects in the first 5 years were completed, but in the second 5 years, many of them were due to pushback on efforts to reduce climate change and stop coal plants have been canceled. And so a large number of coal plants have been canceled in this initiative. And there's a few that are ongoing, but basically China announced in 2021 that it would no longer support investment in overseas coal projects through the Belt and Road Initiative, and immediately canceled a whole group of projects. And there's a few projects that are still ongoing that are also, their future is under question. In the meantime, China's also made huge efforts in wind and solar and hydro and renewable power. And it's fair to say that the push in the last couple of years has been more towards clean energy. And this has, had a few challenges. I think solar energy, and we've also been tracking a lot of inflation in the cost of renewables projects in different countries around the region. And so there have been some financial challenges with those solar projects, but overall we see most of them going ahead, and there's a lot of positive movement in these renewable projects in the Belt and Road Initiative going forward.
Okay, great, Alex. Thanks for that synopsis. As you said, so that the focus seems to be shifting more towards renewables, as is the focus globally, I suppose. But of course, we know that China still, has a big interest in maintaining coal as at least, a security of its energy supply, and hence why I suppose it was making those investments the last decade. You talked about sort of various reasons why the renewables even projects have stalled a bit. I mean, give us your view on the current context of China's sort of economy, if you like, and its economic status, its budget, it's the health of its economy. And of course, it's had a few challenges in the last year with its property sector, which are kind of all impacting funding, aren't they? They're all going to impact its thinking on where it's going to spend its money going forward. How much of an impact do you think its challenges, quote unquote, of the last year or so from its own domestic economy is going to impact its BRI outlook going forward?
Yeah, the real estate industry in China has some major challenges with construction starts on new housing down by a third. And so that's having a huge impact on the Chinese economy. But I do want to separate that, very relatively negative view on the real estate sector from the overall manufacturing and also from the renewables industry in China. China's renewables industry is really booming, and we've seen we're expecting China to install 230 gigawatts of wind and solar this year, which is more than the US and Europe combined, in fact, double the US and Europe combined. So this is quite an amazing step forward for China in terms of its leadership in technology, the leadership in deployment, the economies of scale. And meantime, China has also rapidly expanded the exports of many energy transition technologies, such as solar modules and solar panels, of which China supplies about 80% of the global supply, and also wind turbines, electric vehicles, and batteries and other new technologies. Including hydrogen and electrolyzers. So the renewables industry and the new energy industry is really booming in China. And I think it's very interesting that you mentioned the challenges overseas, because in some ways, it's actually been these geopolitical challenges that have launched and caused China to accelerate the energy transition domestically. And I think if you think back 5 years ago, when Donald Trump is starting the trade war with China, there are many challenges. And then through the last couple of years with the Ukraine crisis, challenges accessing global gas supply, and also seeing what the US has done in terms of restricting trade and access to international commodities, chips, and also other technologies for China. So I think one of the takeaways that the Chinese government has had from the last 5 years of geopolitical tensions is that energy security is more important and will get more important than ever. And so this is one of the reasons that China in 2021 announced its carbon neutral 2060 target, even before other markets such as Japan or South Korea ever did. And also China has restarted many of the new investments in coal. A lot of people see this as very conflicting. Why is China on the one side a leader in renewable energy, but also a leader in deployment of coal? But if you look at it from an economic and also energy security context, both of these technologies are very cheap. And also both of them are very supportive of China's domestic economy and energy security. And I would also mention that the amount of money going into wind and solar is actually 5 times more than that going into coal. So although China is the largest country in terms of constructing new coal power in the world, but it does have a clear timeline over the next 3 to 4 years to end that. And the amount of money going into coal is a lot more limited than it has been in the past. So overall, I think China has taken on this energy security challenge and I think turned it in a positive light. Firstly, building the wind and solar scale of the domestic industry faster and bigger than any other country in history. And then secondly, with the Belt and Road Initiative, looking to export those technologies to other developing markets.
Great, Alex. And in terms of just the Belt and Road, again, I mean, I think this was mentioned in your report as well, that the earlier part of that BRI sort of decade, if you like, was very much lending, towards these projects. And now there's more sort of direct investment. Can you give us a bit of an outlook? Is that how you see things continuing?
Yes, so it's very interesting, the evolution of the projects under the Belt and Road. I think the early days of the Belt and Road, we have to think back to the financial crisis. And after the financial crisis, China gave the economy a huge stimulus, especially in heavy industries. And that caused a rapid ramp up of supply of heavy industry, of steel, cement, of real estate, coal plants, all kinds of power equipment as well. And so in 2013, when this initiative was announced, part of the reason for this was to capture some of that excess supply and overcapacity in the domestic economy and send it out to the rest of the world. Now, I think in some ways it's been quite successful, but what's happened over the last 10 years is that this has changed a lot. And I think the government initially put a lot of funding and financing behind the Belt and Road Initiative, looking to invest in assets all around Asia and Africa and other parts of the world. But the overall returns and success of those projects has been limited. In fact, we were tracking 20 to 30% of the projects under the Belt and Road in the power sector have not gone ahead, and many of them have lost money, and the value of those assets has actually not lived up to expectations. So we do see a shift away from the direct investment and more scrutiny from the Chinese side and from banks looking at making sure that these projects can make money. Not all of them do. Some of them are politically motivated, building relationships with allies of China. But they're at the end of the day, they do want to make money, and making a profit on these projects is very important. Now, for that reason, a lot of the more recent investment has been pushed into engineering, procurement, and construction, EPC, which means that other companies, partners with Chinese companies, are taking on the risk, some of the financing, or maybe all of the financing. And the Chinese company comes in and builds the project on the EPC side, and then also can provide technology and equipment, maybe engineering expertise, to help those countries that do not have such good expertise to build those projects. And China's had a much better success rate with engineering, procurement, and construction than with a direct investment of greenfield projects. So I think it's fair to say the Chinese power companies and developers, they have a very good track record of building and delivering power projects in China. But when they go to another market, such as Indonesia or Pakistan, they're a lot less familiar with the local politics, the local law, the environmental situation, and other, I guess, complexities of putting together a large infrastructure project than the local players. So I think that's one of the moves. And I think even in the last few years, we've seen a further move of Chinese companies even sharing more of that engineering and construction part with local companies and local partners in those target markets, and then focusing more on providing equipment such as solar modules, such as nuclear power plants or hydropower turbines and things like that. So a lot of the manufacturing and export coming from China is also under the Belt and Road, and China is building a much stronger track record in those areas.
Okay, and I mean, Alex, just a bigger picture question on that front. Like, is there any competitor to China in terms of this strategy of its investment, getting its finger in all these different Asian countries? Of course, you've got here where I sit in the Gulf, big plans by the Gulf economies here to invest in their own power markets, but also, they have BI, let's say, Belt Road Initiative of their own plans, if you like, to come into Africa, into other areas. In the Middle East, do you see possibly that other investors, other geographies can catch up with what China has been doing in Asia, or has it just been too far ahead in the game?
Yes, so I think the power sector is very different to some other sectors such as oil and gas, and in fact that it's a very regional and local market. I think most of the activity in the power sector is done by local utilities, typically over 90% in most countries, or even 99% or close to 100% is carried out by local companies. So that's very different to the oil market, where we have giant global companies that are doing a lot of investment, exploration, and moving oil around the world. So I think it's true, and I think that's part of the reason why, as I was mentioning before, China's had difficulty in investing overseas. There are global companies, there are US companies, there are European companies, there are Chinese, Japanese, South Korean companies that can do the construction, that can do the engineering, and then have that expertise. They typically come in and work with local partners, especially in those markets that don't have a lot of local capacity to do that and expertise. But over time, it's important that the local expertise is built up, and also it saves costs typically to have the local construction and engineering done locally. So I think that's something that we have to keep in mind, that although China, it appears that this Belt and Road Initiative is big, but I'd say that it's more of a supporting role. The actual amount of power sector investment that's going on around the world is very, very large, and most of it is done locally, and that will continue to be the case. Now, if we look at the history of power markets around the world, there have been several attempts by power utilities to regionalize, to globalize, to become global players. But the typical result of that is business failure or a lack of competitiveness with the local players. So over time, we see that the local players that are investing in different kinds of technology, whether it's conventional fossil fuels, hydro, or renewables, altogether, and have a diverse portfolio and good relationships and understanding of the local market. those companies typically tend to do better over time than a global company saying, I'm going to be the best solar developer or the best coal power or gas power developer in the world. And then those advantages of that scale are not really there. Now, where we do see scale in terms of scale of economies of scale and actually expertise is on the equipment side. So if you look at, for example, the gas power industry, there's only 3 or 4 companies globally, such as GE, Siemens, and Mitsubishi, who can produce those global gas turbines, and they have excellent economies of scale to be the top technology providers. And then typically they work closely with a lot of local companies in different markets. Now, I believe China is also pushing towards more of that kind of model where they want to be provider of technology. And the Chinese companies are very innovative. They're also looking not only to be a leader in solar or wind, but to do integrated technology solutions, looking at building wind, solar, and battery storage or gas, and integrating in terms of a secure power supply and an economic power supply, and providing those solutions to regional and local players in markets around the world. So it'll be very interesting because a lot of companies are fighting for that area, and it's a hot and booming area. There's a lot of investment going in. The Chinese companies are one of the players that are going to be fighting for that. And because they have a very large scale in the domestic market, they have some major advantages.
Okay, and how about their access to technologies to be able to do that? In the context of the US-China trade war, access for China to certain, software, etc., that you just mentioned is going to be part and parcel of integrating these power systems. Is that a challenge at all, or is China coping on its own?
Yeah, so we all know that China's had some major challenges, such as with computer chips, with cell phones, and with other AI and other technologies such as that, where the US is really dominating the technology and is restricting China's access. It's a very different situation in the power industry. I've been in the China power industry for about 15 years, and over that 15 years, we have really seen the process of Chinese companies localizing and building a lot of the technology. And so I'd say in many ways today that China is the leader in a large number of the power technologies in the world. And part of the reason for that is that what's happened in China's power installed capacity is now much, much larger than any other country. China is now a power market that is the largest in the world by far, and about 50% larger than the US, which is the second largest. But most of the US power assets were built 10, 20 years ago. And I think China, most of the power assets were built in the last 10 years. And so we see that expertise, the number of engineers, millions and millions of construction workers, people that have built all kinds of power projects, whether they be nuclear, hydro, gas, or coal, and including wind and solar and now offshore wind. All of these engineers and expertise in China are based on practical experience and continuously evolving the technology. So China certainly has a big lead, and I don't think there's any way that the US or other countries can restrict that technology for China in the power sector at the moment. And in fact, if push comes to shove, China is actually able to restrict some of the access, for example, on solar module manufacturing in some ways to other countries because it dominates so much.
Let's just talk a little bit about prices and price forecasting, which is another area of your expertise, if you like. How, putting aside, oil markets now, where we've seen some volatility and there's a lot of geopolitics that plays into what's happening there with pricing as well as fundamentals. But is it becoming easier or more difficult for players and stakeholders in this particular sector of power fuel forecasting? Or easier? What's the outlook for that in terms of having some stability there for project planning and for investment?
First of all, the fossil fuel side, last year we had a huge energy crisis and the costs of fossil fuels went up in a huge spike. And so that created a huge amount of interest and a huge amount of investment because everybody suddenly wanted to diversify away from fossil fuels into renewables, into hydrogen, into nuclear, into everything. Every kind of technology that is even remotely possible, people were interested in it during the energy crisis. Now, this year, the opposite has happened, and in Europe, the kind of gas prices have come back down to a more normal level. Oil prices, I guess, are at a more normal level or at a stable level, and then coal prices have also come down significantly. And that means that everything which is kind of looking in a competitiveness lens with fossil fuel is looking less attractive. Now, another thing that we've been tracking over the last 1 or 2 years is that there's been inflation in the cost of renewables projects. Now, there's one exception to that, which I'll mention later, but if you look at markets like Japan, in Southeast Asia, in Australia, and even in India, the cost of building a solar plant or the cost of building a wind power farm has gone up by 15, 20, in some cases 30% or more. Now, what's that been driven by? Firstly, it's been driven by higher interest rates because we all know renewables is very capital intensive. There's a lot of financing costs that go into this. So the interest rate hikes from the US Fed and around the world have had a major impact on the cost of renewables. And secondly, there's been inflation as the market has scaled. There's been inflation on the cost of construction, of land, of insurance, of engineering, and a lot of logistical costs going into the management of these renewables projects. Now, the one exception that I wanted to mention was that China has come through all this with very little inflation. In fact, the cost of building projects in China has continued to go down. The interest rates in China have continued to go down. And so China is the one market that we see booming today that has escaped inflation in renewables. But I think for other markets outside of China, including India, there's actually a very intense competition going on between fossil fuels and renewables. And at the end of the day, there are cheap options on both sides here. But as we see the cost of coal and the prices of coal and gas coming down this year, I think some of that cost competition is intensifying. And so some markets such as Indonesia and Vietnam, we see they currently seem to have sufficient supply, but I think they are under a huge amount of pressure to stop future investment in coal. They have a number of coal plants that are being built at the moment. But what happens in those markets in the next 5 years, and whether a market like Indonesia, which has never really invested a large amount in renewables before, whether that market is going to take off, I think those are some very interesting questions that we see going forward in terms of the costs.
Alex Whitworth, Vice President, Head of Asia Pacific Power Research at Wood Mac. Thank you so much for joining us today on Halftime Talk.